How to trade this critical zone for Bitcoin. Hello lovely YouTube family, welcome back to Silly Crypto. Before we start, I want you to hit that red subscribe button so that you never miss out on any of our videos. After briefly halving its value last week, Bitcoin is currently in a stretch of double-digit intraday movements according to Wall Street experts, and this wild run isn't expected to end anytime soon. For Bitcoin investors who thought they could manage the crypto volatility, it's been a nasty shock. Last Wednesday, the world's largest digital currency fell 30% in a single day to almost $30,000 per unit. Bitcoin reached a new high of $64,829 in mid-April. Even by crypto standards, the turbulence was intense. The last time Bitcoin had such a drop was in March 2020 during the height of the COVID epidemic. Even back then, the trade wasn't quite as shocking. According to Coinmetrics, Bitcoin has seen 14 down days in May alone. And based on Bitcoin's closing prices, there have been 39 days this year with daily fluctuations of 5% or more in either direction. In the entire year of 2020, there were 42 such days. While the digital token rebounded quickly on Monday, rising 20% above $39,000, strategists believe that increased regulatory pressure and the digital token's technical picture hint at more wild trading ahead. In a note, Peter Berezin, chief global strategist at BCA Research, stated, "The drubbing that cryptocurrencies have received over the past 2 weeks is just a taste of things to come. Crypto markets will continue to be regulated more strictly. The suffering in crypto markets might push down other speculative assets like tech stocks in the short term." The recent swings coincided with increased regulatory attention in the United States and internationally. The Federal Reserve of the United States will shortly publish a report explaining its research into central bank digital currency. Meanwhile, Chinese authorities have promised to crack down on cryptocurrency mining and trade. After a severe sell-off last week, Bitcoin has recently stabilized, but there will be more short-term pain before long-term profits. Or is the selling really done? Bitcoin has struggled to get going this week after a significant loss last week. Every attempt at a recovery has failed. Stock markets, precious metals, and various fiat currencies have all experienced similar price movements. This is simply another example of asset prices becoming more connected, which I believe is due to central banks trying to mend an unfixable financial system. Money printing must continue to keep the economy and markets running smoothly. Many individuals will not be willing to spend their hard-earned money on something vulnerable to cyber theft at this time, and not with a price tag of more than $10,000. New COVID-19 cases have recently surged substantially across certain key European countries, causing worldwide data to soften again. As a result, investors are more cautious because they are concerned that the recovery may have already stalled. Bitcoin's attractiveness as a shelter and a risk asset, on the other hand, keeps it sustained, especially since, unlike other assets, the digital currency supply is restricted long-term, and this makes it fundamentally bullish. In the short term, there's a chance we'll see more weakness as a result of the initial worries, as well as the fact that price action is quite heavy. However, it's worth noting that in the long run, a correction isn't always a negative thing. Modifications make it possible for additional people to join a game at a reasonable cost. Corrections also aid in removing fraud and excessive speculative interest, both of which can be harmful, and as crypto fans discovered in late 2017. Bitcoin performed exceptionally well on a technical level earlier this year, breaking above its long-term negative trend line in July and peaked at just around $12,500 in August. Since then, it has been struggling with each attempt at recovery proving to be short-lived due to several primary support levels failure. This is clear from the graph. It needed to hold above a significant support zone between $10,430 and $10,540. Unfortunately, Bitcoin has been unable to reclaim this position for nearly 9 days after slicing below its last week, making it a significant resistance zone. As a result, if the bulls are to recover control, the discussed resistance area must give way soon. Although Bitcoin USD has found some support around the psychologically significant $10,000 level, the fact that it is still battling to recapture the overhead resistance makes me question if a conclusive breakdown is imminent. If the market breaks decisively below $10,000, it will first target $9,750, a previous resistance level, before moving on to the $9,000 to $9,200 range. If it falls to this level, I expect to see increased buying interest as a result of the convergence of numerous technical factors. First, it's where the 200-day average intersects with the earlier breakdown area and the top edge of the 2017 peak's broken bearish trend line. That's all there is to it. Both the optimistic and bearish situations have been described. Therefore, before speculating on the short-term direction of prices, traders may want to wait for either the bullish or bearish trigger. But let me be clear, while I have emphasized the risks of possible short-term drop, I am long-term positive on Bitcoin. And this week's market trends show that this week the stock markets in the United States took on a new personality. The Nasdaq 100 at NQ, which comprises the large-cap technology stocks, fell 5% on Thursday, and the first time it has dropped more than 5% since late July. Bitcoin BTC began the week on a positive note and ended it on a negative note, mirroring the price activity in U.S. equities markets and precious metals like silver at SI and gold at GC. BTC reached a high of $12,000 before settling at roughly $10,600 for the week. From a relative strength standpoint, Ethereum ETH temporarily rocketed to fresh 2020 highs at $490 before giving up gains and finishing the week marginally higher at $406. The intra-week price action was turbulent, even though ETH was barely moved on a weekly ending basis. And this week, Ethereum reached fresh highs before stalling as it digested previous gains. Since breaking out above $250 in late July, Ethereum has lost very little ground. For the past 4 weeks, prices have been range-bound, indicating that bulls with substantial gains are reluctant to sell, even at far higher levels. The recent success of Ethereum's decentralized DeFi network could be one explanation for ETH's current growth. According to the blockchain data, for the third month in a row, both the average and median daily transaction fees have reached new all-time highs. Next week's market forecast. Recently, it appears that cryptocurrency markets are gaining more attention and moving closer to the mainstream with each passing week. Last week, the industry witnessed the first SEC-approved token offering in the United States, as well as the filing of documents for a new Bitcoin BTC fund by financial behemoth Fidelity. The iEdge Bitcoin Index was released this week by the Singapore Stock Exchange XGX, and the launch is a significant step toward for the Bitcoin industry worldwide. Asset management firms based in Europe, the United States, and the Middle East currently manage most crypto assets. A long-term stimulus for cryptocurrencies might be an injection of money from the Asian institutional investors. Cryptocurrency investors will be keeping a close eye on Bitcoin BTC next week, and in terms of price action, Bitcoin is currently targeting previous resistance from February as well as the $10,500 breakout zone from July. Prices may be more likely to hold the two senior levels of resistance combined for support. Ethereum is digesting in a sideways fashion now that it is far above any resistance from 2020. To get help, technicians will have to go back to 2019. The critical level to watch is the $364 highs from June of 2019. And that's all for today, folks. I hope you liked the video. If you did, make sure to hit that like button and subscribe to the channel so that you never miss any amazing videos from us.